Ready to buy a house, I'm going to give you a brief summary of 7 different types of loans. First one is the FHA loan. 580 credit score, 3.5% down. Don't have to have great credit in order to get one of these loans. And they're pretty good for first-time home buyers. Conventional loans. I would say you need to have at least a 680 to 700 credit score to make it worthwhile. You can do as little as 3% down. And it's important to check if you fall into one of the AMI, area medium income areas, because if you do, you're going to get a reduced rate and it's going to be a pretty good deal for you. USDA loans. This is in specific areas. They're considered rural loans, but you can do 100% financing, and you can actually finance above the purchase price to pay for the closing costs. So if you're buying a $300,000 house and it appraises for 310, you can finance that 10 in and use it towards closing costs. VA loans, you have to be in the military, you have to qualify, be eligible. It's 100% financing, and you don't have to pay any mortgage insurance. You can typically get into a VA loan if the seller pays closing cost help for very little money. Bank statement loans. This is for self-employed people that can't show pay stubs, W-2s, or tax returns. In this case, you're putting 20% down. You're providing the underwriter with 12 months of bank statements. They're going to add them all up, divide it by 12. That's going to be your income. Really important. You can't have a lot of non-sufficient funds or return checks or anything like that in those bank statements because it can affect you. Profit and loss loan. For someone that can't provide bank statements, but you do use a CPA to prepare your taxes, they do a 12-month profit and loss. It starts from 12 months prior to when you actually want to purchase. So if you're buying a house in June, you're doing the 12 months prior. It's not year to year. It's also 20% loan down, and you are going to have to provide 3 months bank statements to show that they match the P&L that was prepared. An asset loan, this is just having enough assets to qualify, no job, no income required. So if you're buying a $400,000 house, you take that 400, you multiply it by 1.25, roughly $500,000 in assets, no issue buying the house. It's also a 20% loan. In all cases, all these loans, if you want to increase the sales price and you want to ask for that money back to pay the closing cost, you can, but those are 7 ways to get into a house.